Welcome to Willis Weighs In, where we discuss controversial and newsworthy tax topics. I'm Ben Willis, contributing editor with Tax Notes. Today I'm joined by Jasper Smith, executive editor for commentary here at Tax Notes. We'll be discussing student loan relief and its tax implications. Jasper, thank you so much for joining me.
Thanks so much, Ben, for having me on. It's always a pleasure. And I'm really looking forward to talking a little bit more about this topic, especially after having had the chance to read the article that we recently published. And if you know, obviously, that in that article, we argued, or you argued, that the common law purchase price reduction could apply to all student loan debt relief. So if we can jump right in, my first question for you is a basic one. Why write on this topic?
So I focused on this topic because I realize there's a lot of folks out there who don't appreciate that their student loan relief is taxable, generally speaking. And so we happen to live in a world of coronavirus relief where the CARES Act and executive order and other actions are constantly being undertaken in order to provide us with relief, given the pandemic that's wreaking havoc across the globe. And tax relief, I think many people just assume is going to accompany that. I mean, why would the government relieve me of student debt and then impose tax debt on me? So intuitively, it doesn't always align with how the tax rules operate, which is unless there's an explicit exclusion from income, you're going to be taxed on cancellation of debt income. And so I really wanted to focus on what was being covered and what wasn't as far as tax relief for all the massive student loan relief provisions that have come about as of late, both legislatively and through the executive branch.
So, with that in mind, what do you think will be the ultimate result when it comes to student loan debt relief here in the near future?
I think the incoming Biden Harris administration is going to take executive action to provide for much broader student loan relief than the Trump administration has. And so obviously Congress has the authority to do this. But as we've seen over the past year, the executive branch has the authority, which I talked about in my article, bestowed under the Higher Education Act, to go ahead and take executive action to relieve students of loan burdens, federal loan debt. And so President Trump was actually the first to go ahead and provide student relief. And let me just be clear about this. He did, in fact, ensure cancellation of debt for students. A lot of people view his actions as a mere suspension and not otherwise eliminating student loan debt, and that's just not the case. He was the first person to take action on March 20th, and then after the CARES Act was passed a week later to provide broader student loan relief, he once again took up the mantle on August 8th to extend that to the end of the year and make some additional relief available. And then on December 4th, he extended student debt relief into the Biden-Harris administration until specifically January 31st. 2021. And so by doing that, he actually canceled debt, not only just through the general ways that we think about, which is zeroing out the interest rate and deferring these payments. But keep in mind, so many of student loan obligations have a time limit on them. And so if you're a government employee and you're part of a federal loan forgiveness program, or you're on an income-based repayment plan, then you generally would have a 10-year or 25-year period, respectively, as to when those amounts would be paid off. And the CARES Act went ahead and deemed those loan payments as being made for purposes of complying with those 10-year and 25-year programs. And so by deferring these payments, which President Trump has done, he's canceling thousands and thousands of dollars of debt. I know somebody, a friend of mine, who's actually benefiting over $5,000 just this year alone from the relief that he's provided in permanent student loan cancellation. So I think if Biden doesn't take up that executive action, it may be, interestingly, that Trump beats him to it. And I know it. This goes along. So it's a little bit of a contentious issue as to whether or not student debt should be relief. But as I just said, President Trump has already done it, and it would be a way to inject trillions of dollars, but over a trillion if he desired, but certainly billions of dollars into the economy, um, and he's certainly known for doing that, and trying to stimulate the economy to maximize markets as much as possible. So I don't think that's out of the realm of possibility either.
Well, I think you spoke to it a little bit in that answer, but it's a good time to kind of hold your feet to the fire, if you will. Do you, Ben, think that student debt cancellation is good policy?
I'm gonna go with yes on that. And I think I've got to stay true to form as far as being controversial and be speaking out where others won't. I do appreciate this as a contentious issue, and I think that's mostly because folks look at the facts and circumstances of every different person out there as far as who might benefit from student loan relief. Are they a doctor? Did they go to graduate school? What are their facts and circumstances? But let's not kid ourselves here. If this action were taken, it would be done for the greater good of the country. It would not be based on any one individual. And so I think folks are losing sight when they're getting so granular in their analysis. I mean, let's face it, this would be a bailout. And our country has a long history of bailouts for a number of industries, broad industries, and they're not focused on the individual who's necessarily getting a particular benefit and making sure no one gets a benefit who didn't suffer some corresponding economic detriment. I mean, the Congress, our Congress, just decided to pass out $1,200 checks across the board to the country, and then $500 per child, notwithstanding any changes in their facts or circumstances or detriment by COVID-19. And so, this certainly has some precedent. And as I alluded to earlier, uh, Republicans and Democrats have already supported student loan cancellation. Trump has been doing it since March 20th. His actions to continue that relief afterward, which, as I said, you know, provide permanent cancellation of debt, have been supported pretty much across the board. And so I could see the same policy logic that I am explaining to you now as being more universally accepted, and I think it has over time. So we'll see if that trend continues.
Well, we can certainly appreciate your optimistic view about both parties potentially getting behind and supporting this issue. Obviously, we can welcome unity whenever that happens for the two parties. So, in that last answer, you made a point about historical support for bailouts and how they relate to sound policy. So it was obvious when reading your article, you've done a lot of research in that area. Were you able to find any historical corollaries when it came to this type of bailout program?
Yeah, absolutely. Um, And before I jump over to those historical corollaries, which I think are important, and we'll focus on the stock market and the auto bailouts and banks, financial markets, housing, all beneficiaries of broad, bailouts. I just want to go back to that policy question. I talked about Trump and Biden a bit, but um, I think it is pretty noteworthy that Joe Biden received more than 10 million votes than any other winning president in history. And so, with over 80 million votes supporting his platform, which included student loan relief, I think it's safe to say that a large bulk of Americans, certainly the majority of voters by far, supported his platform, including student loan relief. So I just wanted to touch on that before I move forward with the historical precedent. As far as that, we can all go all the way back to Alexander Hamilton. I mentioned him in my article, which we've been, touching on since the beginning. But in my article, I did not discuss the fact that he addressed the first market crash, known as Wall Street's first crash, in 1792, when he authorized Treasury's spending of millions of dollars to buy securities in the market to prevent a market crash, which we saw in the Great Depression. But he was able to ward that off through government spending for the benefit of the country as a whole. And for general welfare, which I talk about more in that article. But since then we've had the S&L, savings and loan crisis, the targeted banks. We've had the auto bailout. We've had in the Great Depression, actually, in 1933, we had legislation that was passed to relieve homeowners who are facing foreclosure of that possibility by eliminating the interest on their mortgages and suspending payments, which we've seen again in the Great Recession in 2008. Joe Biden had a hand in helping out with the real estate market there, which didn't only focus solely on the homeowner who was paying off that debt, but it also focused on the industry at large, by injecting money into real estate through tax credits and other incentives. And so I think our country has quite a bit of familiarity with bailing out large groups that haven't necessarily had a corresponding loss, for the greater good of everyone, and sometimes in instances where the parties help contribute to some of uh, the economic difficulties that they're facing. And so I think that precedent is good support for likely student debt relief in the future.
Yeah, you said it a little softer than maybe I would. I think that you illustrated we're pretty good at getting ourselves into debt, right? Now, on the flip side, and to your point, being more serious, that does mean that the American government has a lot of experience with how to administrate these programs to help get out of debt. Now, switching gears a little bit, you dedicated a section in your article to the general welfare doctrine. And we know that a lot of others, for instance, Jack Cummings, relatively recently, have written extensively on that issue. Now, can you take a few moments now, though, and just talk about how that doctrine and specifically how it could play a role when it comes to this topic?
Sure. So the general welfare doctrine has been around for almost a century as far as tax relief that it's provided to exempt income. And general welfare has been synonymous with what historically folks would view as welfare payments. But that term, I tried to dispel a little bit inside of my article by explaining where it comes from and the fact that it encompasses all support that Congress chooses to bestow upon all sorts of industries and individuals throughout the country. And so um, the problem with the tax doctrine is that it's focused usually on needs of an individual or particular groups of individuals. And again, I tried to dispel some of that there, not only by going in and looking at what general welfare means and how it's been defined, and how, including in the Constitution through its taxing power and spending authority, but also just through how it's been applied to larger groups of individuals. I included Indian tribe examples in there. We have well over 500 federally recognized Indian tribes, and in the early and 2012 and 2014, I cited a notice in a RevProc where guidance was provided broadly to tribes to determine their own sovereign needs for determining their own general welfare. In other words, you know, the federal government, the U.S. federal government, left it up to these sovereign Indian tribes to determine how they define general welfare effectively. Now, there of course there were some requirements and whatnot, but generally speaking, they were very open to the concept that these governments should be able to determine what's in the best interests of their sovereign nations. And so they didn't focus so much on individual need and the individual proving and establishing to the federal government that they meet some federal standard for low income or what have you. As again, I mentioned, some people might associate with the term general welfare. That's just not how it works. And so um, Section 139 of the code is a provision that allows Treasury to go ahead and allow for relief provided pursuant to a federally declared disaster, a national disaster, to be exempt from tax. And so they've done that in some informal guidance. So the IRS has published some guidance with respect to student payments and the CARES Act. But there are actually some gaps that still exist. It's not entirely clear that they've exhausted their authority to cover all the payments that have been bestowed and the relief bestowed on students with respect to uh, relief payments and loan cancellation that has been done through executive action. And so there are still some gaps there, but yeah, that's what that section covered and was about.
Okay, thank you. And adding on to that, as we alluded to earlier, the bulk of your article discusses actually another doctrine, which is the Purchase Price Reduction Doctrine. So it's very clear that you feel that's an important one for us to focus on. So can you talk about that doctrine for a bit?
Sure. So, stepping away from the general welfare doctrine, where Treasury has clear authority to just say, okay, this section says that provided by Congress says that we can provide this relief, um, and they may, and that has to be connected to a national disaster. But what happens when that national disaster doesn't exist any longer? What happens when the beneficiaries of the relief don't fall within the policies that align with Treasury's views on uh, benefits that should stem from the coronavirus pandemic? And that's why I focused on this purchase price reduction doctrine, which is much broader um, than the general welfare doctrine, because one, it applies outside of a national disaster and unspecified incidents, and importantly, I distinguish it from a code section provision that does address purchase price adjustments. And so historically, in much of the student loan relief guidance, and in my article, I focused on RevProc 2015-57 as it relates to the Corinthian College incident and the school closure and the relief that was provided to over 50,000 students there, many of which didn't receive their degrees. And their debt was in fact canceled, many due to fraud and misrepresentation. In that notice, like other pieces of guidance, the authority in 1085 was looked to with respect to cancellation of debt. 1085 was enacted in 1980 under the Bankruptcy Tax Act, and it it only applies between a buyer and a seller involving purchase money debt. And so obviously people think of real estate when somebody's selling someone else their home. It could happen between you and I with a car, Jasper, and all of a sudden you realize that you sold me a lemon, which wouldn't surprise me. And then you decide that the purchase price is going to have to move down a little bit. And so you say, well, that instead of owing me $10,000, let's call it 5,000. basically the courts have said historically, well, we're just going to look at that transaction as a whole. We're not going to see that as a reduction of the debt because Jasper's car was really bad, but or not as represented. But these folks realized that the purchase price didn't reflect the economics, and this happens all the time in M&A deals. When somebody buys a company and they expect earnings to be X and they to turn out to be Y, and they say, well, wait a second, you sold me a company that you told me was very profitable, and there's mechanisms built into those agreements for purchase price adjustments. But again, that code section is limited to the original parties, and that's made clear in the legislative history. And unfortunately, the IRS as well as the courts have confused that code section and didn't properly appreciate that underlying legislative history. And a prime example is Rev Rule 92-99. That's often cited for student loan relief, as it was in the Corinthian case, where there is a fraud or a misrepresentation. In that revenue ruling, they basically say, well, wait a second, we're only going to allow the original parties to be a party to the debt reduction, except when we have an infirmity. So if there's something that would render the debt legally unenforceable, then we'll realize that the lender might go ahead and just concede and reduce that amount. And if that happens, even if they're a third party, we'll go ahead and allow that. The problem with that is that's in conflict with the statute and the legislative history. And so they didn't have the authority to do that in the revenue really. They didn't have the authority to extend code section 1085. What they did have the authority to do, and what many people believe they did do, is they pulled in the contested liabilities doctrine, which gets at exactly that, the legal enforceability of a debt or its amount, and says, well, wait a second, half of that debt relates to this one semester where we told you were going to get X and you didn't. And so because of that misrepresentation, we're going to go ahead and allow that contested liability to be reduced, regardless of the legal proceedings that actually occur. But for tax purposes, we'll go ahead and respect that. And so they pulled in that contested liabilities doctrine, and then a court several years later in a case called Preslar, even confused that doctrine more. The court in that case looked to whether or not the contested liability doctrine could apply, and found that it couldn't, and it found and it focused on 1085 as the purchase price adjustment rule. It was in the dissent of that case that you actually see a description of the purchase price reduction doctrine, and a famous case called Sherman, which I discuss inside of the article, which really shows how broad that doctrine is, that you don't have to be the original buyer, you don't have to be the original seller, the lender or the creditor. The parties could have changed, and notwithstanding that these events occurred, if there is a reduction in that debt, they will treat it as a purchase price adjustment and look at the transaction as a whole, and therefore there will be no income because there wasn't an accession to wealth. There was a decrease in the value of what you received, and therefore an adjustment to reflect that. And so I wanted to focus on that because truth be told, this student loan relief that folks are talking about could happen now as it relates to coronavirus, and that's where the general welfare exception might come into play. But it could happen in a year, 2 years, 6 months. It could happen in stages, waves. And in that case, the common law doctrine should be available to the government as a third party in relieving this debt.
And you make a strong case, and we certainly hope that others agree with you that this doctrine is alive and well. If they do, though, that could have broader implications, right? Who else could benefit from that common law exception to income?
Yeah, that's a good point. And I think that's what was the focus of the Preslar case, which was the IRS trying to prevent the taxpayer from invoking judicial doctrines to reduce their taxes. They were trying to maximize taxes and say, hey, there's only a few exceptions to cancellation of debt income under Section 61A11 that specifically specifies that it is income that must be taken into account and taxed. I can see why the IRS would want to limit such a broad doctrine. And I believe that it could be appropriate for them to provide some guidance on what they view as the limitations of that. There are courts that I pointed to and other authorities on this matter that view that that doctrine is alive and strong and only being narrowed in very limited circumstances. I pointed one that relates to foreign currency and statutory rules that later came into play. But otherwise, the amount of transactions that the purchase price reduction could apply to are great, and I think that's appropriate in most circumstances. Like I said, I think the IRS might want to clarify what limitations it believes are out there, but where you have a decrease in value or the parties agree to a decrease in value and that's appreciated, I think there's broad relief there. As an ex-corporate guy, and I'm still a corporate guy, I always will be. I started my career doing that. I can't help but think of all the M&A transactions. Section 381 of the code says when you have a successor to another corporation's assets in a number of listed transactions, they'll basically subsume that taxpayer's identity for a number of purposes that are listed in that statute. And it's a non-exhaustive list. And I think, does this apply there to make, again, 10885 only applies to original parties. So if a debt is transferred, would it apply in a 381 transaction? I think a strong argument can be made there. What about 351 transactions? We've got a rev rule from 95 that provides when certain assets are transferred, the recipient corporation will effectively step into the shoes of that transferring corporation with respect to the liability. And I could see that analysis being extended in a number of other areas as well. And deals, acquisitions of companies as a whole that might have been deemed liquidated, maybe under a 338 election or a check the box election. Maybe it qualifies as a 381 transaction, maybe not. But yeah, I could probably rattle off a lot, and I'm sure for those of our readers who appreciated the perspective inside of that article, I'm sure they're thinking through a lot of permutations with respect to their clients.
Well, thanks, Ben. That's actually all the questions I have today. I appreciate you having me on today to talk about this relevant and really a timely topic, right? Now, only time will tell if your prediction will come true. But again, I think listeners will benefit either way from this informative discussion and from going back, if they haven't already, and reading that December 7th article on the topic. Because really, when you think about it, regardless of what the outcome is when it comes to student loan debt relief, I think you've made a strong case that the purchase price reduction doctrine could lead to some interesting conversations in the future.
I agree. Jasper, thanks so much for talking about this with me today. I really appreciate it. For those of you watching and listening, thank you so much for joining us today. Please don't hesitate to reach out with any questions or comments. You can find me via email at ben.willis@taxanalyst.org, or you can head on over to Twitter and I'll be at Willis Weighs In. Thanks so much.
Willis Weighs In.